from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Peloton's downhill ride has investors sweating. The high-flying connected fitness stock hitting a rough patch as the pricey spin bikes become harder to sell, and now they're dropping the price. Our exclusive conversation with CEO John Foley this hour. Plus, Amazon-backed Rivian is seeking an $80 billion valuation as it files for IPO. Could the electric pickup truck maker pull off one of the biggest debuts of the year? And NFT marketplace OpenSea expecting $1 billion in transactions just this month. I'll speak to the CEO about the future of digital assets. All that in a moment, but first, investors have wondered for months when the Federal Reserve would begin scaling back its massive asset purchases. Here's what Fed presidents told Bloomberg from the Fed's annual retreat in Jackson Hole, Wyoming, as the taper debate gets underway.
The criteria that we put in the statement about what would it take for us to begin tapering, I think we're pretty much there.
We still have a fair amount of energy and momentum. I think that we can do our tapering faster.
Let's phase out the purchases and let's give ourselves some breathing room in 2022.
Keep it simple, stupid. Let's just start this process. Let's get that over with.
It may actually give us more flexibility down the road on our decisions on the Fed funds rate.
The timing and pace of the coming reduction in asset purchases will not be intended to carry a direct signal regarding the timing of interest rate liftoff, for which we have articulated a different and substantially more stringent test.
Fed Chair Jerome Powell there, of course. Bloomberg's Kriti Gupta joins us to talk about the market reaction. Kriti, how'd the markets wrap up the week?
Well, Emily, no surprises. That was good news. That's really what they want to know, that the tapering deadline wasn't moving further along. It wasn't moving forward either. So that was good news. Really, Chairman Powell confirming what we knew last week from the FOMC minutes, that at the end of the year is when they're really starting to look back on pulling back those bond purchases. And it has no impact on the rate timing either, the rate hike timing, I should say. So right here, you see the S&P 500 in the green, big tech in the green as well, even semiconductors up a whopping 2%. Yields even higher, or actually I should say come down a little bit, but it wasn't a massive move, not the likes that you'd see in a taper tantrum, for example. So Emily, the question here is, where do stocks go next in particular when you start to continue to have this Fed support and no surprises? Well, strategists are mixed, and take a look at this. This is the high-end strategists, or the high forecast, I should say, over 4,800, the low end at 3,800. The spread between the two has never been this high, and you can see where we are right now, closing above 4,500 today for the 52nd year-to-date high, the 52nd record high this year. So really crucial to talk about the fact that if you don't know as an investor where the market's going next, you're not alone, because strategists are mixed as well, which brings me to a micro story that, of course, we all have our eyes on. That is Peloton, dealing with a laundry list of concerns. First, those earnings, then that price spike, and now regulatory concerns as well. It has the share price coming all the way back to June levels, really just taking out about 3 months of gains, Emily.
All right, Kriti, thanks so much for that roundup. I want to dig deeper into Peloton now. Its forecast missing estimates by a long shot. Analysts weren't expecting the connected fitness company to slash the price of its most popular bike. Peloton also confirmed it's been subpoenaed by the U.S. Department of Justice and Department of Homeland Security for more information about injuries involving its treadmills, and the SEC is now investigating Peloton's public disclosures around that situation. Even so, Peloton CEO John Foley remains positive about the company's position and future. I spoke with him exclusively earlier.
I think our business is in fantastic shape. We had a crushingly good 2021 that just ended at the beginning of July, which was our fiscal year start for 2022. We grew 114% for our subscription business, which is our core business, and we just guided to more than 56% subscription growth for that same business. So we're feeling like the growth is there. We're making smart investments in our business for future growth, and we feel great. We've had an incredible year with COVID. 50% sub growth against a COVID year, by the way, which is pretty Herculean, and we're feeling great.
So you're cutting the price of the bike by 20%, which would be, about $400 for your most popular bike. Why do that now?
Oh gosh, I'm glad you asked, Emily. We are so proud to be able to offer our bike at a lower price point. It's been our dream. 4 or 5 years ago, maybe 6 years ago, going back, the founders and I, it was like nails on the chalkboard when people talked about Peloton as a product and an experience for rich people. And it's not. It's for everybody. We keep talking about democratizing the access to great fitness. And so lowering the price of the core bike today, to answer your question directly, we were able to do it now because our supply chain capacity finally caught up with our demand. So now we are going to be able to make over 1 million bikes this year. And so with that type of capacity, we can lower the price to now $39 a month, which feels accessible. When you think about you and your live-in partner might split the membership, or you might both ride the bike, it's under $20 per month for the hardware, under $40 per month when you factor in the $39 subscription. And so we feel great about the accessibility, and we were very proud to offer it. It's the right thing for our business, it's the right thing for our communities, and it's the right thing for our members.
Now, you just disclosed you've been subpoenaed for information about the treadmill recall by the DOJ, by the DHS. The SEC is also investigating. And look, there's concern you didn't recall them soon enough. Children being in danger. What can you tell us about this?
So we will always cooperate with authorities whenever there's an investigation. We're proud of what we're doing. We're making the right decisions. We don't have anything to hide. I will say that another government agency, the Consumer Product Safety Commission, also I want to say investigated us, but we were working with them to get on the right side of the line with safety for our tread, our lower price tread that we just announced is going to be for sale next week in the UK and Canada and the US for the first time. So we are now on the right side of the line with the CPSC with respect to safety, and they feel good about our new product, which we obviously do too. We think the new tread is going to be a game changer. William, on the earnings call last night, William, my partner, said that he thinks that this could be potentially bigger than our bike business. So we're super excited about the tread category. And of course, we're going to cooperate with any investigations.
So, you did express that optimism about the tread business on the call, saying it could be even bigger than the bike business. And what makes you so confident, given it's been a difficult start? And what are some lessons you've taken away from this process, which I'm sure has been incredibly challenging?
Yeah, for sure. The reason why I'm confident is I believe that this boot camp style workout, treadmills of yesteryear were running machines where you just got on and droned on for 30 minutes and you kind of didn't love it. The Peloton treadmill brings circuit workouts, boot camp workouts. You're on the tread for 5 minutes, you're off the tread. You have a heart rate tether, so you get, you're still connected to the leaderboard when you're off the tread, but you're doing weight training, you're doing full body boot camp workouts, which are super popular, even more popular than indoor cycling classes. So the category itself of treadmills is much bigger than in stationary bikes. And the content that you consume in these classes, the bootcamp classes, is even better from my perspective, from a full body perspective, than just the core indoor cycling. So we think it's going to be a fantastic product. We love the Net Promoter Score is already 85 for that product. So we have high hopes for the tread category.
So what else is on the Peloton roadmap that investors can get excited about? We've reported on some potential new products, a rower, a strength training machine, a new heart rate wearable. What are the status of those?
Yeah, so we just reported yesterday that 10% of our revenue has gone into R&D. So we have so many fantastic new platforms, to your point, Emily, across all kinds of different opportunities and new platforms that we're excited to bring to market. We've said that this year is going to be a big year for launching these new platforms. We have nothing to talk about today, but I can assure you that we've got a lot of cool stuff that we're not stopping at a bike or the tread category.
You said you've returned to profitability by 2023. You hit profitability. Some of these issues have taken you back. What makes you so confident you'll get there by then?
Well, the beautiful thing about our business is that it's predictable. When you think about the subscription business, we're going to end this year with over 3.6 million subscribers paying us $39 a month. We also have a fantastic performance-based marketing organization where we can, we know what we're doing with respect to marketing and having that translate into sales. So we're insanely disciplined about performance marketing. So we have very predictable revenues. And when you layer the predictability of the recurring cash flow and the predictability of our hardware sales against a predictable expense base, we can model out and say, yes, in 2023, we're going to be profitable based on understanding our business. So when Jill Woodworth says we're going to be profitable next year, Jill is our CFO, you can sleep easy that's the case. But what we have said is this year is an investment year, and investments are fantastic. We feel very good about all the investments we're making, and it is taking us into the negative EBITDA a little bit, but we feel like it's the right thing for long-term growth.
Now, you've said we're at an inflection point for connected fitness, but there's more competition out there. You've got Mirror, you've got Hydro, you've got Tonal, you've got Apple with its Fitness Plus service. How do you see Peloton continuing to stand out as gyms are reopening and the pandemic is hopefully ending soon?
Yeah, we hope so too. I'm as social as anyone I know, and I'm here in New York City, and we just invested in this fantastic new headquarters. So I'm giddy with excitement to try and get COVID behind us and get back and see all my great colleagues. But I'm glad you brought up the gyms, because from our perspective, that is the competition. We believe that there's 180 million people globally with gym memberships. We believe that those people are paying hard money month after month, and they just want to be fit. If they could get more fit in a better location at a better value, we can shift them over to home fitness. And that is the plan. That is who we see as our true competitors. And we're excited about our value proposition vis-a-vis the gyms long term.
What about international? Like, what do you see when it comes to international expansion, opportunity that you're targeting?
Yeah, we love international. Our head of international, a guy named Kevin Cornell, is out of London, is doing a fantastic job. As you know, we just launched Australia this summer. We have more markets in the works for the coming years. We believe, we know from our members how much they love our products and services. So we're just trying to get to new markets and service new communities. We feel like it's good for business, but it's also good for the health and wellness of people around the world. So we couldn't be more excited about our international opportunities.
My exclusive interview there with Peloton CEO John Foley. For more on this story, I want to bring in Mark Gurman, who, of course, covers Peloton for us out of LA. Mark, what do you make of John Foley's remarks there? I have to start with the tread, his level of optimism about this as a new category, despite these some of them horrifying safety complaints. A child actually died in an accident involving a Peloton tread, but now the company's saying this is going to be bigger than their bike category. What do you think?
I still think he's right. I think the treadmill is obviously the more popular gym equipment over the past several decades. We've seen that in terms of gyms people have at home. If someone wants to pick just one fitness device to have in their home, I would venture to say that they would pick a treadmill over everything else because of the versatility. You see gyms and offices and hotels really focusing on treadmills. I do think, though, they have a serious issue with this Tread Plus. It's north of $4,000. It weighs 200 pounds or more than your average treadmill, and it clearly had this issue that led to a child dying. It has killed pets. It has hurt many people. So I think, maybe the easiest thing for them is just to completely cancel the Tread Plus and focus on that cheaper $2,500 tread. Obviously, if that's their only SKU, it will improve their profitability. They'll be offering a product that clearly has fewer issues. It did have the problem with the screen detaching on falling on people. That is fixed now. That's a bit of an easier sell than the child dying treadmill. So I think they should really go all in on that. And I think that honestly could be quite a successful product. If they split the Tread and the Tread Plus and they make the lower price tread, the high end tread, and they have something closer to the $1,500 price point as a lower entry tread further down the road.
So we'll be watching to see if that Tread Plus does hit the market someday. Let's also talk about them cutting the cost of the bike, which really took Wall Street by surprise. But you heard John Foley saying this is like his dream to be able to offer the bike more economically to a broader set of consumers. It's still not cheap, but it's definitely a step in that direction. Do you see that making a material difference in the number of people who decide to buy one?
No, I don't think it's low enough. They lowered the price in September of last year to $1,895, so we're still in that $1,000 price category. To really move the needle, to really get into everyone's homes, they're going to need to get to that $999 price point. Even if that means raising the point of the Bike Plus a little bit more and raising the price of the higher end, or what I think should be the higher end treadmill a little bit more to offset the losses there. I think if you get the Peloton down to $1,000 or the psychological $999, they'll have a true hit on their hands, and it will be they'll have an immediate skyrocketing of sales. The other question they have to balance here is, do they have enough supply to lower the price further than $1,500, right? That they might have done a internal operational matrix to figure out that, the demand that we're going to get $1,500 is as much as we can handle, because if they make it any cheaper, they're going to sell through too quickly and go back to those terrible supply chain problems they had over the course of the height of the pandemic.
All right, well, shares closing down again, more than 8.5%. But look, we're going to watch this story over the long term to see how these categories play out, see if they come up with some of these new products, Mark, that you've reported on, that we asked him about there. Bloomberg's Mark Gurman, thanks so much for that update. Okay, coming up, all roads lead to the public market. Rivian, the EV truck maker backed by Amazon, files for its IPO. We're going to have details on this Bloomberg scoop next. This is Bloomberg. Let's take a look at some IPO news now. The maker of point-of-sale technology for restaurants, Toast, has filed to go public. According to the filing, the Boston-based company plans to raise $100 million, although the exact amount likely to change. Dow Jones reports Toast could seek a valuation of about $20 billion. And the Amazon-backed electric pickup maker Rivian has also filed to go public. According to Bloomberg sources, the listing could value the company at around $80 billion. Ed Ludlow has more from Detroit on this Bloomberg scoop.
If indeed Rivian does go public at an $80 billion valuation, it would be not only one of the biggest listings of this year, but one of the biggest in the automotive industry of all time. The company hopes that they can list around the Thanksgiving period, although it's completely at the mercy of the SEC in terms of how quickly that will be able to proceed. This is a company that garners a lot of intense interest. It's backed by Amazon, an investor. Ford invests in the company as well. It's got a pretty stellar list of institutional investors backing it, including T. Rowe Price and Fidelity. And yet it hasn't delivered a single car to customers. It hopes to start production on a battery electric pickup called R1T this month, and then a battery electric SUV called R1S later in the fall. But it's been plagued by supply chain disruptions, largely stemming from COVID-19. It's had to push back the start of production multiple times. And despite its current situation, it already has such a big eye on the future. As we reported, sources are telling us that they're already scouting for a location of a European factory and a second US plant. Right now, Rivian is in talks with the city of Fort Worth to invest as much as $5 billion in Texas to build a second EV factory, expand its US manufacturing capacity. So there's still a long way to go for this company, but it's really seen as one of the main potential competitors to Tesla, partly because so many former Tesla employees or alumni work at Rivian, not just in the upper echelons of management, but right down in sort of pretty important engineering and production roles as well. So the market paying really close attention to this one. And really, the only question we don't know is how much money Rivian plans to raise when it lists. Ed Ludlow, Bloomberg News, Detroit.
Meantime, it's become increasingly likely that car maker Audi will start building vehicles here in the U.S. as parent company Volkswagen electrifies its lineup. Bloomberg's Matt Miller spoke exclusively with Audi's new CEO, Markus Duesmann.
We have to work on range, and we have to work on our charging infrastructure, and both together, there's always an ideal mix. We do invest in several ways in charging infrastructure, together with partners in the public infrastructure, and also we are now running into a project where we will offer premium charging infrastructure that will be high-power charging in cities. Our first city where we do that is Nuremberg, and the project is starting at the moment, and we will have many cities where we will offer that midterm. So charging infrastructure will be key to the success of battery electric vehicles. I fully support that statement.
You know, your parent company, Volkswagen, does make some cars in the U.S. I've been to the Chattanooga plant. It's really impressive. CEO of Volkswagen, Herbert Diess, has said in the past that Audi may produce cars in the U.S. for the North American market. Is this still a possibility?
The American market is very important to us. Yeah, we have so many customers there. And that's why we always discuss where to produce the cars that we sell. And discussions on a possible production in the US are ongoing, but we don't know at the moment what the result will be. But we do have factories where we produce platforms that Audi also uses. So with the platforms I said earlier, which we will certainly produce all over the world, the potential to put an Audi car production-wise into the US is even higher than now. So it is an important point. US market is super important for us. The customers are super important for us. And the likelihood of us producing in the US is there, yes.
Markus Duesmann there, Audi CEO, with our Matt Miller. All right, coming up, as we continue to await a verdict in the Apple versus Epic court case, the iPhone maker settles a lawsuit with other developers. We're going to have all the details next. And take a look at shares of the payment platform Affirm, soaring in extended trade after the fintech company announced that Amazon customers will soon be able to use its flexible payment solution at checkout. It's currently being tested with select customers, but plans to roll out more widely in the coming months. This is Bloomberg. Let's take a look at a few other stories we're watching. Apple has settled a wide-ranging class action lawsuit with U.S. app makers, but it did so without agreeing to major changes to its policies. The iPhone maker will, however, make it easier for developers to promote alternative ways to pay without Apple taking a cut. Meantime, China reportedly is taking steps that could curb the ambitions of tech firms that want to list abroad. Dow Jones reports that the government plans to ban companies with large amounts of sensitive consumer data from going public in the U.S. The move could give Beijing more control over the complex structure Chinese tech companies use to sidestep restrictions on foreign investment. Plus, Canada's Accelerate Financial Technologies plans to launch a carbon-negative Bitcoin ETF. It will use trees to offset the unfavorable environmental impact of crypto mining. Accelerate will plant more than 3,400 trees for every 788,000 invested into its ETF. And Bitcoin isn't the only digital phenomenon getting attention. NFTs are picking up steam after a springtime lull. After the break, I'll be joined by OpenSea CEO Devin Finzer on how the world's largest NFT marketplace plans to see $1 billion in transaction volume this month. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's get back to the markets with Kriti Gupta to wrap up this week's action. Kriti, take it away.
Well, Emily, it was a broadly risk-on day today. A lot of that coming off of Chairman Powell's speech at the Jackson Hole Symposium virtually, of course. Here's what didn't do so well, though, and it's noticeable on a broadly risk-on day. That is those Chinese ADRs, down 1% on the day, even as you saw some of those other biotech and stocks, the semiconductor index, those tech subsectors actually do fairly well. So this is a lone outperformer, but I really want to dive in to what the semiconductors were doing in particular, because this is a chart of auto sales to chips. Really, at the very end of this chart, you can see that it's just completely dove. Really, this idea that as you start to see that chip shortage become a bigger worldwide phenomenon, less and less autos are being made, less and less are being sold. So that brings me, of course, to our next chart, which is going to be the next risk sentiment indicator that I have my eye on. Cryptocurrencies. We can't end the week without talking about that. Broadly up today, which is no surprise, is giving that Chairman Powell really did allow risk assets to do well broadly. The question is, can Bitcoin continue to maintain its position as that risk sentiment indicator, simply showing that if Bitcoin is up, then investors are willing to buy anything, whether that's emerging markets, whether that's oil, whether that's stocks. We'll have to watch on that next week.
All right, Kriti, thanks so much for the roundup. I want to stick with crypto and talk about the rising popularity of Bitcoin. Bloomberg's Eddie Vanderwall explains why investors have a long way to go to get exposure.
Bitcoin could soon trade on a stock exchange near you. Everyone wants a piece of Bitcoin these days, but in some parts of the world, notably the US, investors have to go a long way to get exposure. As an asset that grew up in a parallel financial universe supported by computer geeks, libertarians, and drug dealers, cryptocurrencies traditionally traded on separate venues where regular rules didn't apply. Opening a trading account sometimes meant sending money to a foreign bank, and this led to several instances of fraud, theft, and mismanagement. If, on the other hand, you wanted to take control of your own Bitcoin, you had to take the risk of getting hacked or losing it as a result of hardware failure. In other words, custody and exposure were complex issues. The good news is, some of that's changing. Venues like PayPal now let investors take exposure to a range of cryptocurrencies directly on their platforms. In Canada, there's an ETF, similar to those investors use to get broad exposure to stocks. Just like an S&P 500 ETF is backed by the stocks in the index, this one owns and stores Bitcoin. In Europe, several products use swaps contracts to echo price performance. Now, for years, there's been a push to launch a similar product in the US. The Winklevoss twins have been trying since 2013. So far, they've been unsuccessful. Concerns that have kept them from doing so are Bitcoin's wild price swings, its use in funding crime and terrorism, and fear that a few large holders, so-called whales, would dominate the market. But some market watchers say the odds of getting approval this year have improved, particularly because SEC Chairman Gary Gensler is seen as less skeptical. He once taught a class at MIT called Blockchain and Money. And that could be a game changer, because it would open the small crypto world to the 6 trillion US ETF universe. In other words, watch this space. I'm Eddie van der Walt. This is Decrypted. For more content like this, follow us on your favorite platforms.
Ready, thank you. Now, Bitcoin bouncing around $50,000, not there right now. DeFi looking to go mainstream, but anyone in the digital asset world wants to talk about are NFTs. Non-fungible tokens allow holders of art and collectibles to track ownership, and they're staging a resurgence after fading from the headlines during Bitcoin's springtime swoon. OpenSea is the world's biggest NFT marketplace and expects to see $1 billion in transaction volume this month. That's up from $300 million in July, $8 million in January. Wow. CEO Devin Finzer joins us now. So talk to us, Devin, about what's driving all of this growth. How do you get from 8 million to $1 billion in 6 months?
Yeah, thanks so much for having me on the show. And actually, just to provide a quick update on the number, we're actually at $2.3 billion in trading volume so far in August. So it's a really exciting time for NFTs. And I think, from our perspective, if you rewind, NFTs have been around since 2017. And this recent surge in excitement is really the accumulation of a lot of hard work from a lot of companies in the space, a lot of infrastructure being built out around NFTs, so that now there's really a lot more for consumers to go in and dig into in the NFT space. There's art, there's collectibles, there's gaming, there's virtual worlds. So there's just so much activity and so much momentum around it. And I think people are really waking up to the fact that there's this whole new digital economy emerging around artists, creators, musicians, and athletes as well, that allows them to sell these digital assets directly to their fans and directly to people who want to engage in these projects. So it's a really exciting time for the space, and OpenSea is at the center of all that. So we've seen tremendous growth of the market really over the last 12 months.
So, we're at a point where you can own a piece of a song. Do you see this, owning a piece of a movie, owning a piece of a TV series, owning a popular sports play? Do you see that going mainstream, happening on a broad scale?
I definitely do. I think, there's really opportunities for everyone here, right? Gamers have been trading digital assets for a long time. They know how valuable digital content is within the context of games. Artists have been looking for ways to engage more effectively with their fans. Musicians, athletes, there's opportunity here for everyone. And there's even use cases for NFTs that are outside of this sort of collectible art or gaming use case. For example, event tickets. We've had some projects where people trade event tickets as NFTs. So this is a very broad ranging technology. And I think it's really just in the early days of being explored, and the sky's the limit.
So look, for the people who don't understand, how do we know for sure these are actually going to be worth something someday?
Well, at the end of the day, it's all supply and demand, right? So, I think if you're buying an NFT, you should think about it as, something that's a collectible, something that's a piece of art, something that you want to own just for the pure purpose of owning it. You should look at sort of the market dynamics over time, and do your own research, right? So there's no guarantee that every NFT is going to be worth something, just as there's no guarantee that a Beanie Baby that you buy is going to be a rare collectible that someone wants to buy in the future. But that being said, there is a really interesting opportunity to own digital content here, and it's early days for the space.
So you've hit a $1.5 billion valuation, unless you have another updated number to share with us today. Talk to us about your investors, your backers, your plans. Are you expecting to go public?
Sure. So with our Series B, we raised $100 million from an all-star cast of investors. We had Andreessen Horowitz, Co2, our early backers, Y Combinator and Founders Fund, and a number of notable angel and strategic investors in the round as well. So this round is really around getting the best possible team to go and execute on the vision that we've really had since we started in 2017, which was to build the best possible NFT marketplace. One-stop shop where you can buy, sell, discover NFTs across multiple blockchains. And we're building the best possible team on engineering, operations, BD to go and achieve that. So really excited about the future of the space here, and excited about bringing on these great strategic partners as well.
Meantime, the NBA and DraftKings are launching their own marketplaces. Talk about the competition and where OpenSea fits in.
Sure. OpenSea is really the largest and broadest marketplace. So we think there's going to be tons of content coming onto the blockchain, tons of opportunity, tons of games, tons of artists. And we've always envisioned OpenSea as the Amazon or the eBay style marketplace where you can go and you can find whatever you're looking for, and then you can resell, right? So we have peer-to-peer trading of a lot of the projects that launched outside of OpenSea. You can go and list those assets on OpenSea. We have really broad coverage, and we're not just about collectibles and art, right? We trade game items, we trade event tickets, we trade crypto domain names. And so it's a one-stop shop, and we aim to make it the best user experience in terms of a marketplace, and also the best place for new people who are still learning about the space, but really want to explore and just get a taste of it before really sinking their teeth in.
So talk to us about transaction costs on the blockchain. Have the upgrades we've been seeing with Ethereum changed things? Is there more that you would like to see?
Yeah, so we're seeing a Cambrian explosion of innovation in the underlying layers for NFTs and the blockchain layers that power this technology. So upgrades to Ethereum have been great. They've provided a lot more stability, but there's a lot of room to grow. So for example, on OpenSea, we've launched our cross-blockchain support. So we now support Ethereum, but we also support layer 2 blockchains like Polygon to allow for much lower cost environments for trading. And this is super critical because, if you're paying a high transaction cost to buy something, it kind of limits the types of things you can purchase, right? It's hard to buy something for only $10 if you're paying a $30 or $40 fee on top of that. So adding these scalable solutions, moving to new technologies like proof of stake are really vital for getting this technology to be adopted by a more mainstream customer. And at OpenSea, we're really excited about the Polygon launch we did recently, which is a really solid step in that direction.
So quickly, what are your favorite NFTs? What should we be watching?
So I'm really excited about gaming and metaverses. So a project called Crypto Voxels is a virtual world where you can own virtual land and you can build museums of your NFTs inside of this virtual world. It's a lot like Minecraft, for those of you who know that. And I think it's really going to be sort of this weird intersection between gaming, art, and collectibles, where we're spending more time inside of these digital ecosystems and building out really unique experiences. So for what I'm really excited about is the projects that kind of take it to the next level and build really engaging environments to display your NFTs. And Crypto Voxels, Decentraland, Sandbox are all really great examples of that. But of course, gotta give a shout out to some of those collectible projects, Cool Cats, CryptoPunks. I see an Avastar on the screen. So I'm a fan of all of the experimentation that's happening in the space.
All right, wow, up to $2.3 billion from $8 million in January. That is quite an explosion. OpenSea CEO Devin Finzer, thanks so much. We'll keep our eye on you. Thank you. Okay, in other news, the House committee investigating the deadly insurrection at the U.S. Capitol is demanding information from social media companies. Facebook, Twitter, and Google are among the 15 companies being asked to turn over records of posts, videos, and other material promoting the overturn of the 2020 election or the January 6th violence. The companies have a 2-week deadline to produce these records. Coming up, a strong second quarter earnings report and third quarter outlook for Dell. But that wasn't enough to stop shares from falling. Analysts citing the storage revenue as a weak spot. We're going to talk to Dell's Chief Strategy Officer, Matt Baker, coming up next. This is Bloomberg. Earnings from Dell and HP show that the personal computer market is being hurt by chip shortage issues. HP executives saying they couldn't meet all the PC orders they received in the last quarter. Dell was more bullish about the outlook, yet the company said it was struggling to get all the chips it needs. Joining us now, Dell Chief Strategy Officer Matt Baker. So Matt, talk to us about this chip shortage and how it is impacting what you are able to produce.
Yeah, well, certainly there's, it's been the talk of the town. There are chip shortages, but what I would say is that we're weathering that storm well. I like to describe our supply chain team as the elite athletes of the supply chain game, and they are executing wonderfully. In fact, noted analyst Patrick Moorhead said yesterday in covering our results that the supply chain team deserved a medal. So we are blowing and going. We feel really good about what we're going. And I think the outlook that we posted suggests that we're bullish going forward and that we are going to manage through these supply issues.
So where do you see the PC market going forward? Obviously, we've seen a spike through COVID, working from home, schooling from home. Now, folks are going back to the office. Kids are back in school. Is the growth we've seen sustainable? Are we going to see a slowdown or, sort of a new normal?
I think we've seen a change in terms of attitudes around how many PCs an individual household needs, how it has sort of seeped its way into all of the business processes that we have, schooling, et cetera. So I don't think there's any going back. It used to be that one laptop or one PC per household was sufficient. Now it's multiple devices per person. And so I don't think we're going back. And, we believe that there is great opportunity in the PC market for some time to come.
But will it keep growing as fast as it has in the last 18 months or not?
I think we'll see growth continue. Of course, we're in a sort of disruptive period given pandemic, given, different elements preceding that. But we do feel like there's an opportunity for growth going forward and that's durable, given that, there's still folks in need of PCs. There's still a number of PCs out there in the world that are 4 years old or greater. So we just feel bullish on the fact that the PC is central to productivity, no matter what industry you're in, no matter what you're doing from a school standpoint. It is the productive powerhouse of the technology era, and we're still bullish.
So shares did end the day down today. There's concern about storage revenue. What do you have to say about that?
Well, first of all, markets are going to do what markets are going to do and stocks fluctuate. We're focused on the long term. But what I would say is we're pretty pleased with our performance. We play very broadly in the storage market. We've gained share over the past many years. We're number one by a mile. We're bigger than number 2, 3, 4, and 5 combined. So, we had some, that the high end portion of the market is not growing at the robust rate it was last year. But we are growing very quickly in the largest segment of the market, which is 60% of the overall storage market is mid-range. That's systems 25,000 to 250,000. We grew that 17%. HCI, which is one of the fastest growing segments of the storage market, we grew that at 34%. So we're really pleased with the performance in the pockets. And I think what we'll see in terms of market results, some changes.
All right. Dell Chief Strategy Officer Matt Baker, thanks for stopping by. All right, coming up, former Facebook executive Deb Liu took over as CEO of Ancestry.com earlier this year. She'll join us to talk about her plans for the family history site next. Meantime, take a look at Disney shares jumping during Friday trade on a report that ESPN is seeking to license its brand to major sports betting companies for more than $3 billion over several years. That's according to Dow Jones. The move could see Disney capitalize on fast-growing online gambling, the fast-growing online gambling industry. This is Bloomberg. Earlier this year, Ancestry.com tapped former Facebook executive Deb Liu to become its next CEO, with the aim of making the world's largest consumer genealogy site more social. Deb recently stepped into the job, joins us now from Palo Alto. Deb, actually, you're 6 months in at this point, just about. And of course, you worked at Facebook for many, many years. Why Ancestry.com, and what is it that you want to bring from a high-growth company like Facebook to this site?
Well, when they reached out to me about the opportunity at Ancestry, the thing that really touched me was how important family is to each one of us, especially during COVID. It reminded me of the meaningful purpose of connecting with your family. My family came to America with almost nothing, and my parents built a life here, but they made sure that we were very connected with those back home. And, we've retained those connections over the years. And so when I saw this opportunity to really take genealogy to something that's more social, more connected, where it goes from kind of an individual activity to a connected community activity, I was very excited. And that's why it lured me to leave Facebook after 11 years.
So my 8-year-old expressed interest in building a family tree, and so we signed up for Ancestry, and he spent hours putting a family tree together. He had so much fun learning about his relatives going back centuries. I realized my parents, my husband's parents are on there, but after it was complete, we didn't quite understand why we needed to maintain a subscription or keep paying that $25 a month. What's the sell to someone like me?
Well, starting out, you start with your family tree and you start discoveries and you kind of have those aha moments. But then it kind of, for a lot of people, they feel like they're running out of things to do. And so one of the things I want to do is actually make it so that it comes to life. Like, for example, collecting your grandmother's recipes so that your son can actually have access to them. Photos of him making dinner with your mother. I think those are something that's really special. And we want to add those kind of activities, kind of community activities to the experience, so that you're not only doing straight up research and getting documents, but you're also talking about what you're discovering, talking about the experience, talking about the individuals, and then really sharing the memories that you have of each of these individuals in your family. And that's where we want to go from here.
Now, where do you see the biggest growth opportunities? Like, what about schools or education?
Well, we have something we call Ancestry Classroom already, where we help teachers connect with Ancestry and bring it to the classroom. But we'd love to kind of expound on that and really, extend that to the kind of activity your son had. It would be wonderful to be able to have every family be able to access a family tree. And so that is something we hope to extend is our Ancestry Classroom work. But beyond that, there's a lot of growth opportunities around connecting in other ways too.
Now, you were the first of a few high-profile women to leave Facebook. Since then, Fiji Simo, who was running the Facebook app, she's now the CEO of Instacart. Carolyn Everson, top ad executive at Facebook, now the president of Instacart. What do you make of this trend? I mean, it can't necessarily be good for Facebook.
Well, there's two ways to look at this story. The story is a lot of discussion around our departures, but actually what most people forget were we were all there for a long time. Each of us were there 8, 9, 10, 11 years. And so when we talk about the departures, it's really one of where we contributed a ton to Facebook. We loved our time there. And it happened that these opportunities came along right now. But also we all spent, it was not people coming in and out 2, 3, 4 years. It was really people who had committed to building a career there and building lasting products. And we still stay in touch and we're still very close to the people at the company. And so I think it's both a story of, women executives getting fostered and getting big jobs at Facebook and then going on to actually do great things in the industry.
So I asked this question to Fiji too. Quickly, is there anything you learned at Facebook or mistakes you made that you don't want to replicate as you're building out a more social site? We have about 30 seconds.
The thing that I hope that we can do is actually make sure that we build, the right level of reporting and integrity from the start. I think that, as you're building out something with social, you want to make sure the connections are good and that people you're actually able to capture some of the challenges that Facebook has had up front so that you don't end up in a situation where you have to clean up later.
Deb Liu, CEO of Ancestry.com. I'll go home. I'll talk to my son about what you said. Thank you so much for joining us. And that does it for this edition of Bloomberg Technology. Stay with Bloomberg Television. Wall Street Week up next. My colleague David Weston will be joined by former Treasury Secretary Larry Summers, former Fed Governor Dan Tarullo, and GM's Mary Barra. I'm Emily Chang in San Francisco. This is Bloomberg.